Hi, I'm Myssy, founder and director of Myssy Co, a professional services firm based in Sydney. Investing in property comes with a whole host of taxes, so in this video, I want to help you understand all of the tax implications, good and bad, when it comes to property investments. Before I continue, however, please note that this video should not be seen as a reflection on our views of the current state of the property market and thoughts on whether to invest or not. We always recommend that you seek tailored professional guidance to ensure that it takes into account your personal circumstances, objectives, and needs. Let's start by looking at the different types of tax that can impact your property investment. The first one is capital gains tax. This is a tax that applies to gains that you make when you sell an asset. These gains are taxed at the taxpayer's own tax rate in the year of making the gain. Next up is a tax on ordinary income. This is tax you pay on your salary, wages, business profits, and investment income such as rent, dividend, and interest. Then we have GST, which is levied on the sale of many goods and services. There is also stamp duty and land tax. Stamp duty is a state-based tax that generally applies to the transfer of ownership of assets, most commonly known for adding extra costs on property transactions. And land tax is levied annually on the land value of property. It is also a state-based tax. I often find that new investors forget to factor these extra costs into their purchasing decisions. But it's important to budget for these potential tax costs because you don't want any nasty surprises when finalizing a purchase, or indeed, over the course of the holding period. But while tax isn't always everyone's favorite topic of conversation, the ATO does allow for certain tax concessions which could make an overall difference to your bottom line. For example, if your property is negatively geared, you can offset the loss against your assessable income. As a result, a lot of investors actually opt for a negative gearing strategy because of this tax offset. I hope you have found this video helpful as a part of your journey to financial success. Thanks for watching.